Hello and welcome to Business Pants. We are Free Float Media. That is Matt Piscardi. I am Damian Rollis. And this is November 5th, 2019.
I love our intro music.
Oh,
I groove every time. It gets me deep. Business Pants.
This is a daily news show to make the business news less sucky. To call out some of our favorite cringy corporate behavior. Anything to add, Matt, or do you want to get right into this?
Let's get right into it today, and we've even got an agenda to go over. Let's hit it.
For those of you who are not, those of you listening to our podcast, we also stream live on Twitch and YouTube in video.
This is true. We do that. What do we got today?
We're going to be looking. We're staying in our apology tours. We have more details about the messes at Boeing and McDonald's. We're going to go into our big data category, talk about our favorite things like Google, Facebook, and TikTok. We're going to go inside the pants today for all of you industry insiders.
That is not a Ken Fisher plug.
We're going to talk some boring inside baseball there, so stay with us. And then in Biz Nuggets, we have lots of fun stuff like Popeyes, Uber, Lyft, Bank of America, Apple, blah, 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 blah. Let's get at it, Matt.
Let's do it.
All right. Let's start off on our apology tours update. Jeez. I got a lot to say here. I didn't think I was gonna have a lot to say more about Boeing and McDonald's, but hey, I do.
They're the gift that keeps giving. Don't be sad.
All right, let's start with Boeing. Here's the depressing headline from the BBC, which just about says it all. Boeing's boss, Dennis Muilenburg, will not take a bonus this year following two crashes involving the firm's 737 MAX plane, which killed 346 people. I don't even know where to start here.
Shed a corporate tear. That's where you start.
Yeah. Actually, we have tears later in the show from our favorite billionaire, Leon Cooperman. Okay.
Foreshadow.
First of all, I want to just say that this is a completely voluntary action, right?
It is. Yes.
And
that's what I heard.
The new head of the board, David Calhoun, who reads like a House of Cards character. I saw him on CNBC. This is David Calhoun, who is really good buddies with the CEO at Boeing. They sit together at on the board of Caterpillar.
Yeah. They sit together at lunch.
They do. They'd have a lot of lunches together. So this is what he had to say about Dennis. He said, "From the vantage point of our board, Dennis has done everything right." So that's the first kind of yikes moment there. He also said in an interview with CNBC that Dennis doesn't like to speak on behalf of board activities, and all this makes him very uncomfortable, which is really good to know from the CEO and former chair of Boeing, who makes about $30 million a year. The new board at Boeing, Calhoun, tried to further humanize Dennis by saying that Dennis called him on Saturday morning at 10 o'clock.
Wait. Who used the word humanize?
Yeah, sorry, that's me.
Because amazing word.
So here's what really gets me. Here's this quote from the new chair at Boeing. He says, and he's very emphatic about this. I watched this, and he reads like a tough guy, like a real tough figure there. He says, "Remember, Dennis didn't create this problem. Okay, from the beginning, he knew that MCAS, which is the flight control system, okay, that has been implicated in both crashes, he knew that it could and should have been done better, and he has led a program to rewrite it to alleviate all those conditions that ultimately beset two unfortunate crews and their families and victims." So I don't know what's going on here, Matt.
Whose fault is it?
I don't understand that. I know. I don't get Boeing. I'm sorry.
Can we back up to Calhoun?
Boeing.
I want to ask you about Calhoun.
Yeah.
So Denny and Davey, P.S., very popular names on boards.
Yeah.
Denny and
Sure.
Davey been on the Caterpillar board together for 8 years.
Yeah.
Dennis on the
Buddies.
audit committee at Caterpillar, and Dave Calhoun is actually the lead director because they also had a chair CEO combination.
Right.
Through last year, Caterpillar nailed for an accounting scandal. They got sued by
Or
investors for
right.
misleading them.
Yeah.
I mean, the intertwining of like, can you actually seriously take anything? When do you know when to take like what the director says seriously? Because you pointed out yesterday, they know each other. They're like buddies,
Yeah.
right?
No, I know. I know, and you can see the way he's defending him, which is like, you made him feel uncomfortable, and here he is, he's calling me, and
Made him
he's
feel
giving up his bonus,
uncomfortable.
guys.
But
So here's the math. Here's the quick math. Dennis took home about $30 million last year, and his bonus usually averages to about 10 million. So Dennis is a hero, right, Matt? He's giving up a full 10 million out of $30 million.
he's gonna have a problem buying another house. That's true. But
Yeah.
but without the like lambasting rich people, rich CEOs,
So that's my
that's
job. Yeah.
you. That's your thing.
Mhm.
I did try to troll Jim Cramer today on Twitter because Cramer was like putting out Jim Cramer. If you don't watch Jim Cramer, amazing. He's on CNBC. He presses sound effects just like us, or we do like him. And he's amazing. But he was saying that his like tweet was Dave Calhoun Boeing strong. It was like I think he might have been live on air while he was doing it because it was like the only way. I just don't understand why does anybody have a job anymore there?
I don't know. I don't know what's going on. I really don't. And by the way, and this whole like bonus thing, it's not exactly like this is written down anywhere. This is just the CEO calling his buddy and being like, I'll give it up for a year, because none of this is part of how they're dealing with it.
It does
right?
remind me.
The board didn't decide this, and it's not even part of his pay that if you kill a bunch of people here, we're not going to be paying ourselves.
But
like
it's
this
classic.
isn't even written down.
It's classic because in the 2008 financial crisis, Lloyd Blankfein of Goldman Sachs and all the banks, they were like, you know what? We're going to make our salary $1 next year. That's how sad we are about destroying the entire financial system.
All right, let's move on to McDonald's because I'm running out of time here.
Speaking of bonuses,
Yeah, so we know what happened at McDonald's. The CEO was fired for a consensual relationship, and we wondered, how did this happen so nicely? It turns out that also the McDonald's chief people officer,
isn't that your
which
title?
which I feel uncomfortable even saying, David Fairhurst, was also fired. Okay, so what's the story here, Matt? I think I figured it out.
Tell me, because I have no idea. I just
So yeah.
fire everybody. Just get it over
Yeah,
with.
this is why I'm here for you. I'm here for you. So McDonald's was recently called out in the She Said book, which is this book that came out the last few months about the Harvey Weinstein scandal and the subsequent Me Too movement. So here's what happened. A few years ago, McDonald's workers weren't even sure who to turn to if a shift manager grabbed them from behind or made lewd comments. 18 months ago, a McDonald's worker in Kansas City spearheaded a historic walkout at McDonald's to call attention to sexual harassment. And there was a point where she also said that, as far as she could tell, McDonald's had no sexual harassment training. It turns out it did, but the company officials later acknowledged that it didn't reach many employees.
This is exhausting.
Yeah, it is. So in a nutshell, I think perhaps this is McDonald's finally cleaning up its sexist mess. I mean, let's hope so. But if it is, why not celebrate the culture change, McDonald's? I mean, in a sense, this shift is a cause for celebration, right? I know. It's a bit of an uncomfortable celebration, but on the bright side, this is way better than celebrating your hero CEO's brave decision to give up his bonus after 346 people died, wouldn't you say?
Also, it was a Jim Cramer morning for me because Jim Cramer just also on McDonald's said about the stock dip, which is currently happening. We can't be sure whether to attribute the stock dip to consensual sexual relationship CEO departing or Wendy's new breakfast.
Ugh, I don't know. If you're gonna fire a bunch of people because you suck at gender relations, tell us. Admit it. Oh, it's good at big data. Um, we got to start with Facebook's new corporate logo because I mean, why
Bam.
wouldn't? Yeah. All right. So I guess
So take a look
Fa-
at this thing. Have you
Facebook's
taken a look at this thing? I don't. To
that
listeners of the
corporate logo.
podcast,
Yeah.
Google it.
If you're listening at home, Google
Facebook new logo.
Google Facebook News. So it looks like it's just all capital letters, and it looks like a Benetton ad. Is that what we're working with here?
The amazing headline from the Guardian last night. That was like, "Can all caps save toxic company culture?" or something like that. It was just amazing.
Yeah. I mean, here's my sense that they hired a team for like $50 million to give them a new logo, and then they were done like a week ago, and against their better interests and people telling them this is probably not the right time to celebrate a dumb logo, they said, "Screw it. We already blew all the money. Let's just do it." Is that? You think that's right?
That's probably close.
Okay.
But worth noting that
Yeah.
because when you announce a logo, like when Nike puts out a new jersey for like a football team, they have to like talk about the jersey a little bit, like, "This one's new and dynamic and will kill the competition." The Facebook sort of talking points were the rounded edges give it a more empathetic look. And
Okay.
I mean, it was really great. It was really amazing.
Yeah, I'm glad that concerning where Facebook is in the culture right now, I'm glad this is what they're spending their money and time on.
Worth
Really,
noting,
I'm relieved. I'm relieved.
no eggplants or peaches in the new logo, because that would be
Yeah,
against policy.
and I don't think there are no politicians lying in this logo too, right?
Well, that's okay with the policy, though. So
Right. Okay. All right, let's move on. So we hinted at this, but it's official. Google is buying Fitbit for $2.1 billion.
a lot
This
of
comes a
billions. Yeah.
Yeah, this comes a year after Google created a Google Health division. So should we be happy about this? Should we be uncomfortable? Like, what was Google up to here?
So we've already got, if for those of you who didn't know, we've already got J.P. Morgan and Amazon and Berkshire Hathaway. It was Amazon, right? Last year, this little consortium like trying to disrupt healthcare. Now Google is buying Fitbit. Fitbit actually it partnered with the Malaysian government. It was either Malaysia or Indonesia. I said this before, but I think it's Malaysia now.
Okay.
To give certain groups in the population free Fitbits in exchange for
Right.
sending the government their health data,
Yeah.
all with the mindset like, "Oh, we can have a healthier populace." Can we just agree that there is they know everything about you?
Yeah.
Just give up. Do we just give up?
I've already given up.
I mean, if Google owns Fitbit and
Yeah.
all of Fitbit's data,
Yeah.
this makes me think of when Facebook announced like their TV thing, that they put a little camera under your TV and watch what you're doing effectively.
Yeah. Watch what you're scratching and when.
Between Facebook and Google, like Amazon knows everything that you ever bought. Google knows everything you ever thought because you put it in a search engine, and they own 93% of that market. I'm
Yeah.
moving officially to DuckDuckGo. Now Google also knows every time you've ever farted, and Amazon, Google, and Facebook knows everybody you've ever met. So there's
Yeah, good for them.
effectively, have we hit peak data ownership? Three
No.
companies own everything.
No. There'll be more. All right. Finally, the U.S. is officially investigating TikTok's Chinese parent ByteDance over national security concerns of which include risks posed by the data that TikTok collects. So I got to ask you, Matt, is this where we are with our Cold War with China?
No,
So
this is
let
where
me set it up for you.
I throw my notebook
Yeah.
because we're
Yeah.
following a conversation about how Google owns all our health data with worried about the Chinese government looking at pictures of us, like 10-second videos of us. Who should we be concerned about at this point? The sort of data monopoly that is Facebook, Amazon, and Google, or the Chinese company that kids like to do short Vine-like videos? I'm just utterly confused by what we actually regulate anymore.
But this speaks to why, the reports of secret meetings between Zuck and Trump, because we can at least all agree that they know that China is the boogeyman, right?
I'm so afraid.
All right. What is this grandfather clock sound effect you have going? What is that?
It's a ticking clock because we have
put me to
timers.
sleep? Okay. All right, let's go inside the pants. This is where we delve into some of the inner workings of our former industry.
That being the environmental, social, governance, analytics industry.
Sure. Just pretend that you didn't hear that. So first, Saudi Arabia formally announces the IPO for Aramco, which will be the world's largest oil and gas company
ever.
Okay, second, there's gonna be a lot about that, so we don't have to worry about it today.
No,
second.
I have quick thoughts.
Give me a thought.
First of all, the valuations on this IPO range between like $1.2 trillion and like $2 or $2.3 trillion. There's like a $1 trillion differential. Short story. No one knows what the fuck this thing is worth. Number two.
Don't tell anyone. Yeah.
I can tell you one thing that's going to hurt whatever it's worth. It's the fact that wrote this down because it was shocking to me. In the last 2 decades, Aramco's estimated 5% of all carbon emissions for industrial companies, all, can be linked to Saudi Aramco. And anything that you're buying from Aramco requires you to factor in the fact that they have, at current oil output, like the amount of oil that they're digging up and sending around the world right now, they can do that for another 50 years without blinking. That's what their valuation is based on. It is not currently based on the fact that there is an Exxon lawsuit for misleading investors about carbon. So something to watch. This will be fun.
All right. Second, proxy advisor ISS is suing the SEC here in the United States over guidance aimed at curbing advice. So, and this is what the guidance is. The guidance addresses some of the grievances that corporations have long had about proxy advisors, such as mistakes in reports the advisors issue on specific companies and conflicts of interest in their business models. So you have about 30 seconds here, Matt. What do you got to say about this?
Short version of this.
Yeah.
You own stock. Most of the time, you can vote with that stock. Mm-hmm. Big investors rely on proxy advisors to give them recommendations on how to vote because they have so much stock so far, right? As companies don't like it because the companies don't want anyone to pay attention to what they want. Advisors like it because they get paid to do investors' work for them. SEC says, oh, P.S., if you're an investor, you should consider whether or not your advisor is doing a good job, your proxy advisor, in voting for you. Did I summarize that pretty much? I think I pretty much got it.
I worked in the industry. I didn't really follow it. So I'm gonna go.
Good. Everybody fell asleep. That took 30 seconds to put them to sleep.
Yeah, we'll have to reconsider this category. All right. Let's go to a more relatable category called Biz Nuggets. That clock is so. It sounds like a Bergman movie. It's just like so. It's like on my slow path to my death or something.
You kind of are.
Okay, well that's true. All right, let's get it going here. All right, a man was stabbed to death outside a Maryland Popeyes in a fight over the chain's popular fried chicken sandwich. I ask you, Matt, have there been any deaths over your beloved plant-based, genetically modified, just as unhealthy as meatless meat burgers? I think not.
Just so you know, in
Win
the
for Popeyes.
Beyond Meat earnings call,
Yeah.
the question was asked, have you guys thought about chicken? So death by plant-based chicken is coming.
Sadly, this is a good story for Popeyes. Sadly, it is. I'm sorry. It's sad, but it's true. All right. Next, our favorite billionaire, Leon Cooperman, back in the news. So it turns out that Mr. Cooperman started crying when asked why he has been so vocal about the 2020 election when he answered, I care. He also said, I don't need Elizabeth Warren telling me that I'm a deadbeat and that billionaires are deadbeats. The vilification of billionaires makes no sense to me, which of course only a billionaire would say. He also said that he is open to meeting with Warren despite threatening her by saying that she is screwing around with the wrong guy. Wow, dude. Did you fire your public relations manager?
So can we
yeah.
Can we just call this like the CEO Terrell Owens moment? It's my quarterback, man. It's my election, man.
I don't know what this guy's up to. He's gonna become a hero of the right though, and of the soft left. I'm guessing.
One question about Leon Cooperman. Cooperman. If Elizabeth Warren had a penis, are we having the same conversation?
No.
Okay.
As it turns out, I did a little digging. He did fire his public relations manager. It was a woman who criticized him for using gold toothpaste. Right.
That sounds spurious to me.
Let's talk about our favorite loss-making ride-hailing companies, Uber and Lyft. So here's the news on them. Uber predicts profitability by 2021, and Lyft has 400 engineers working on self-driving cars. So to Uber, I say, nobody cares or believes you. And to Lyft, I say, now I get why you treat your employees like subway buskers, because you don't actually want them around in the first place, right? They're just placeholders.
Yeah, the Uber managing to come into profitability only a scant year after Lyft suggests it will. Right. Neither of them actually suggest that all profitability subject to whether or not they actually have drivers as employees or not. So congratulations, gig economy. You lose.
Oh, I think we all lose, Matt.
Oh,
except for except for the wonderful convenience of having a cheesecake delivered to you in 30 seconds or less. So thank you, gig economy.
I am hungry.
Next, Bank of America is going to raise its minimum wage for all employees to $20 per hour a year ahead of schedule, and believe it or not, I don't have anything snarky to say here. I don't know. I can't think of anything negative. This sounds sounds good.
But I do feel like all the angst about like living wages, if like it kind of needs to die, doesn't it?
Why?
Because companies very clearly are still operating. It's like 2, 3, 4 years ago, companies started raising their minimum wages because the federal minimum wage was not going up. The states took matters into their own hands. Companies started raising the minimum wages, and earnings are totally strong and fine and great. No one's complained. The stock market hit all-time highs at the Dow in the past couple of weeks.
So what are you saying?
I'm saying, can we just throw the bullshit flag on paying people to do work is a problem for our economy? Can we just end that conversation?
People. Yes. Speaking of that conversation, in our last Biz Nugget, Apple said it will donate $2.5 billion toward a California housing crisis that it is partially responsible for creating in the first place. And Bernie Sanders says, essentially, who cares? Pay your stupid taxes.
Ever articulate.
right on time with Biz Nuggets today. I love it. All right, let's go into our new favorite category here, and I want to plug Matt for a second here because I worked in the industry at the mothership MSCI for many years, along some brilliant and wonderful people, right? But what Matt creates here on a day-to-day basis, it is important. It's amazing. Like it took teams of 4 people sometimes to come up with points like this. It took them like 4 months.
Well,
so I'm here to plug Matt Makes. I am. I'm here. I'm
plugging it is. It's easy to be unregulated, baby.
Exactly. So what do you got today in Matt Makes?
Welcome to Matt Makes Incredulity.
Ooh.
I'm incredulous today. I'm incredulous because I want to talk about unicorns, which are the private companies that were worth $1 billion or more, and now a lot of them have gone public. And I want to do Caveat Emptor edition because I saw a tweet by Bloomberg reporter Shira Ovide, I think it's Ovide, about how a lot of these unicorns who have gone public basically suck. Their market performance is terrible. So I'm going to start with the buyer. Her tweet showed Xiaomi, which is a little-known unicorn, down 47% as the biggest loser in the unicorn class. And the only winners, really, Pinterest is up a little bit. There's a Chinese company that's up 41%, and then Pinduoduo, which I've never even heard of, up 124%. Congratulations them. But Slack, Lyft, Uber, Snap, Spotify, Dropbox, all down from their listing price. They went public, all down. And it got me thinking about what analysts say these companies will do versus what they've been doing. It's something that I've talked about as hype, analyst hype. So I put together effectively, you need a little primer because analysts, when I say analysts, I mean like Wall Street analysts, sell-side analysts. These are people whose job it is to give a value to a stock. They do it in 12 to 18-month increments. So they basically take all this data about what the company does, their earnings. The shorthand version of what they do is called the PEG ratio, which no one on earth outside of finance could give a shit about the PEG ratio. Like, put a peg in my eye socket because that's what I care about when it comes to the PEG ratio. But what it really means is they're just taking what the current share price is and what the earnings are and some fairy magic to what their share growth rate should be in the future, right? That's how they come up with some of their estimates. When you put analyst target prices against whether or not these companies are actually making money, profitable, earnings, how much money they make over how much they spend, there is approximately 0 of these companies that are making any money. So big win.
0. Yeah. And
out of the companies that were listed, the unicorn class, only one of all the companies that I just talked about is actually under, like, the analysts don't like. And that's Pinduoduo, the one who has positive stock performance.
Okay, that's great. Jeez.
Okay. Every other company, the analysts on Wall Street love them. Like, they're all the price targets are above what their current price is.
Yeah, because they have cool apps.
Putting dog ears on shit has never been cooler, okay? So this is where we get to caveat. The caveat in Caveat Emptor, which means beware.
Yep.
Also, all of these companies except for Uber are actually controlled companies, dual class shares.
Oh.
Uber is the only one. If you are buying in to the hype, Uber is the only one where you get a vote. All of the other ones, no one cares what you think as a stock owner, okay? Number 2, the other thing that you're buying, the last thing that you're buying is a mess of mission statements that include Pinterest's mission is to bring everyone the inspiration to create a life they love. You know how you do that at Pinterest? You make no money, analysts will love what you do, and you take pictures and you put it on a board. I am trying desperately to figure out what exactly you own when you buy these stocks, because you don't own profitability. You don't own, as Slack says, making work simpler, more pleasant, and more productive. Is it more pleasant for us? Is everything more pleasant?
We use Slack. It's not more pleasant.
It's not more pleasant necessarily.
No.
Dropbox simplifies life for people around the world. Simplifies my life by storing some files. They simplify my life.
In a folder.
So what you're buying, this is my takeaway. What you are buying, if you're buying a unicorn, is hype. As long as you know that and you're cool with that, buy away, my friend.
And again, I'm going to repeat, and you're getting a cool app, right? Because I noticed that all those companies have like cool apps, right? Isn't that what we're really talking about here?
It is very true.
Cool app. Well said, Matt. Please subscribe to us in your favorite podcast app and tune in tomorrow.
This was Business Pants. It's Damian Rollis and Matt Moscardi.
See you later.
Tomorrow.